Okay, David, we're live. Thanks for joining me. Floor is yours to introduce yourself to my audience, kind of background about who you are and what you do.
Absolutely. So, David Lorango, 15 plus years in marketing. Vast majority of that in DTC, direct to consumer. Started my journey at the wonderful company, I would say professionally. Wonderful company owns Fiji Water, wonderful pistachios, Palm Wonderful. Really great there. I learned, I'd say, the fundamentals of CPG and branding. They are fantastic at finding a market, understanding their market and audience segment, and going to market with that and winning and cornering the market. From there, I went on to Fandango, and then from there, brief stint at Charming Charlie, and then ran ecom marketing, all at ecom. I was really all at ecom for Forever 21 for over a year and a half. Had major success there. The business then sold to private equity. And then from that point, I decided to be, I'd say, freelance doing consulting, digital consulting. Was the right time, was 2019. Then obviously led into lockdowns and everybody, and literally their mom wanted to do DTC. So I kind of got lucky. The business grew from there pretty substantially. And then since then have worked on a variety of businesses. And then those that have raised a lot of capital, including Nick's Ice Creams, which raised 100 million in seed round. So I think an over $1 billion valuation in 2020 or 21, whichever it was, I can't remember. And then now currently owner of Startup Accelerators, focused on early to mid-stage startups, probably up through Series B rounds of funding, making sure these companies are set up to get their next round of funding and really accelerate their growth for both .com as well as Amazon.
Definitely helpful. A lot to unpack there. It sounds like you have a ton of experience.
Too
I'm not sure if
much.
you can boil. Yeah, I'm not sure if you can boil it down. You mentioned some of it about, identifying a market and establishing a brand, but what were some of the biggest lessons you learned in your pre-entrepreneurial journey working for those larger companies in marketing
Yeah,
and growth?
it's a great question. I think the one that I have that I still have that I'm grateful for. A lot of people on my side of the aisle, they're left brain or left brain leaning or left brain adjacent in the way that they think about marketing. And this happened, I'd say, over the course of the last 5 to 6 years, really, where everything became about the lower funnel dollar amount conversion rate. What can we get? What can we get for the dollars that we're putting in? The wonderful company, I'd say to some degree, frankly, even Forever 21 in terms of branding. What I learned is branding, visuals, and aesthetics matter tremendously. If you look at the wonderful company brands, they are some of the most beautiful out there. They remain it. Fiji Water sold premium water to pretty much the masses when water was kind of a commodity and a very inexpensive one. They sold premium water. They're still premium. They visually are a brand that's compelling. I learned great design and great branding there. And I would say that's a learning more than anything else. Usually brands forget that. They want to see numbers, they want to see dollars, they do their business plans, but they forget branding essentials. That is something that I've taken from the CPG world. The other thing that I would say failure and success in that vein, especially during lockdowns, pre-lockdown, a lot of brands started to get into this lower funnel, lower funnel, lower funnel. What I saw was really important there is lower funnel is crucial for efficiency. So you can't do lower funnel to some degree at scale, it will cap out. So what I learned to do well, at least early, is kind of like when venture capital and funding was kind of just, falling from the sky, was being able to be efficient. So as a growth marketer, I didn't just look at here are dollars, let's just grow it, let's forget about profitability. I understood how to squeeze a dollar out. So Fandango, the margins were so tight on there. Ticket sales, they kind of break up in 3 and 3 and 3. So ultimately, actually, we at Fandango would only make maybe a few dollars profit on each ticket sale, maybe if we're lucky. So that meant my cost of acquisition had to be very, very tight because the margin was razor thin. So learning how to be hyper efficient has helped me in my now entrepreneurial kind of endeavors because I understand that growth comes in certain kind of buckets. One is obviously just top line, but the other is really about efficiency. So efficiency, scale, and then branding are the two things that I think I learned that have helped me really well over the last several years.
Can we talk about Fiji Water specifically from a branding perspective and what that meant from an ROI? I mean, you basically talked about it that they were able to sell, I don't know, arguably better water, maybe not, maybe it's not better than Aquafina, but they could sell it for so much more. What kind of like ROI are we talking, or can you put a dollar amount on that it allowed them to place on the brand?
Good question. It's a great question. I think it's better water. I still drink it. This is my first, I still drink it. It's my go-to. It's from the Fiji aquifer. So the aquifer in Fiji, they kind of make it, it's bottled. It's literally untouched from the oxygen all the way to the bottom. Now, that's obviously a brand story. What's the value? brand placement started there. Probably remember way back in the day when Fiji Water would sponsor things like the Oscars or the Emmys. Huge branding there with celebrities. They were in, if you watch Friends had it in their refrigerators. Lots and lots of dollars. What was the ROI? I mean, I would say over the course of that business doing it, it was over 20x, which is a wild number to think about. So Fiji Water is in the 7, 8x multipliers at this in terms of digits. And in terms of what was spent, right, it wasn't really lower funnel. There wasn't lower funnel. There wasn't an Amazon play per se. There was retail, but all of this was heavy branding, right? And so I'd say it's fair to say 10 to 20x, possibly, frankly, even more. That's the other thing about brand I would pivot to is it's hard to look at that multiplier year one-on-one. It's year on year stack. So in year one, it actually could be negative. If you do a big brand play, think about something like Logan Paul and KSI, right? Like the terms of how much media you would have that exposure, it'd be 10, 30, 40, 50 million dollars, right? But now look at the business because they did that. They were able to multiply it in 1 year. But Fiji Water, and again, Logan Paul and KSI, think about how much that company is worth now. Is that a 20x? Is it a 30x? And so branding is, it is incremental until it's exponential. So Fiji, I mean, I can speak to it. It would at least be a 10x, which is, again, but I inherited it at that moment, at that inflection where they started to become the mass, right? 2012, right? So right around there, maybe even early 2010.
I mean, really quick, just because you brought it up with Prime, I'm curious, just considering your experience, like, is Prime profitable now? I think you make a really good point that they basically use their audience to market, right? So there's no cost there. I mean, is the company profitable, or where do you see Logan and KSI sitting? Like, are they making money and pulling money out of it now? Is it an acquisition play? What's your perspective on what they're building?
I do believe, don't quote me on this. I believe that they became profitable as of this year. I believe, and or maybe even the tail end of last year. You make a really good point. I know that they were in the red when they started, but usually, nearly all, and especially in the startup world, if you can break even in year one, like you have had a huge win at scale. They invested tons of dollars in brand. They got into a lot of retailers. I think I think they're in the billions of dollars now in terms of revenue, billions and billions, maybe tens of billions. And so again, when you think of maybe even it was, let's give them something like $100 million that would have cost, maybe frankly, but you do the X multiplier, they may be at 100X multiplier. And that is a good example of it, but they really went to bat with their brand marketing. And I know to pivot that way, I think brand is so crucial now because there are so many micro competitors, which I love. And I love there are micro competitors taking on the big ones. But where micro struggle is they struggle to build a brand because they need to be profitable up front. It's exactly what you're saying. Or they can't really invest the capital in that way. Logan Paul, KSI, and their venture company that was kind of funding them could do that. But there's a lot of successes and there are a lot of failures more so that just went out to market with a product without good, solid branding. Corollary with a brand that I worked with for quite a long time, Betty Buzz. Brand mattered there too, right? So it's Blake Lively's brand. It's her brand of beverages, but the business isn't just Blake Lively. It is focusing on the quality of the ingredients. And so as much as Blake Lively is really important to the brand, eventually at some point it can't be, right? And that's kind of where the inflection point too for Betty Buzz is getting into retailers. So speaking there on profitability, I believe it has to be tailored to at least a 2-year stack if you're doing heavy level branding. So that's a good question. But again, all that to answer, and I think they are profitable right now. I think. Again, listeners can check me on that, fact check me.
Yeah, I guess we'll see, right? I'm curious to see what happens 5 years down the line with that brand. Do they still own it? Do they sell it? But what is your perspective on an acquisition? Does that kind of take away, if Coke buys Prime, is Prime no longer that special because it's less connected to Logan and KSI, or does it not matter at that point when you've established that market share and presence?
Yeah, I actually think if I had to, even brands that I work with now that are kind of getting in that stage, you do want to be away from the celebrity slash name associated with the brand. You want it to be separate. I'll give a great example for myself. Casamigos is a fantastic tequila. I actually didn't recall or remember that it was George Clooney's until somebody reminded me. That's a great example of how you want to leverage equity in any celebrity or any influencer, any micro influencer, wherever you are. Does it take away the specialness? I think the specialness is what gets you in the door. I think the product is what ultimately matters to the end user. So usually I'm more concerned with an acquisition that happens when the formulation or the quality of the product gets diluted. And I think that's usually where the concern is, which is why I have all these like microbreweries that eventually sold, which I love Lagunitas. I would say it's not the Lagunitas that I went to, that I loved when it started, but it still largely maintained that quality. So I think the specialness is usually in that kind of micro space because of the formulation of the product or what have you. It's usually just making sure that that it doesn't diminish or devalue. Now, a good example is Naked Juice. Remember, Naked Juice was everywhere. And then I think they sold, and now they're a part of the portfolio, I believe, in PepsiCo's portfolio. You don't really hear about them that much. They bought them when they had that special uniqueness. They were kind of at peak. Now they don't hear about them as much. And so I do think, yes, they'll probably get acquired. I think maybe that is the goal, to get acquired by one of these big beverage companies, but they may lose some of that uniqueness and probably some of the scale, which ends up happening. Hopefully not. I like the product. They came in with a very hard sell in a very difficult market. But yes, I think it loses some cachet if the buying company doesn't continue to allow it to do what it did to get it to that.
Okay. And kind of in the same vein, to continue this, I always wonder about market saturation, or everybody has an audience today. Everybody's an influencer, right? So I was on Amazon the other day and I just searched energy drink. Jocko Willink has an energy drink, The Rock, Chris Williamson, More Plates, More Dates. You just mentioned Blake Lively. I mean, is there a place in the market for all these brands to be successful, or are we at a point where it's too saturated?
That's a multi-billion-dollar question. Might be a trillion-dollar question, if I could answer that. I think it's so I've been thinking about this a lot, Connor. I've been thinking, like, how there were mom and pops, right? Very small mom and pop shops way back in maybe the 40s, 30s, 50s. And then all of a sudden these monoliths came about, right? These bigger companies over time. The Betty Crockers became huge, right? That they became P&Gs. They became these big CPG monoliths. And we're kind of like stay in the CPG zone. They became monoliths. Then what started slowly happen is the mom and pop literally like husband and wife teams, mom and pops came in and took over some more market share. And then over time, what happened is it eroded at these big monoliths. And so I'm really happy to see that there aren't just the monoliths that exist anymore. Where this goes, right? So they take market share. You're right. I don't know if it's only oversaturation if those businesses can't tailor their audience segments. Where I think the challenge for a lot of these brands is you can come in, and I believe there's a mark. Chris Williamson will have his audience. The Rock will have his audience. Certainly Blake will have her audience. It's always this inflection point of how do you scale outside of that audience target that you have? So I don't know if it's saturation per se. So if you can find and narrow in on your segment and on your audience, I think you can live there. It's then scale is the next big challenge, right? So if you look at like the one that's now oversaturated is these kind of like soda companies, right? So like Poppy and Olipop came in into a fairly oversaturated market, but then they started to scale outside of it and they found more success, I would say, by finding their niche market and then scaled more broadly. And so saturation, I think, only happens when you're playing for a market segment that you don't understand. And I do think, to speak to that on startups, most startups fail because they don't know their product market fit, or at least that's one of the reasons that they fail, is they want to be everything to everybody. And then when you're everything to everybody, you're nothing to everybody, or you're nothing to nobody. And so in this case of saturation, I think it's something like a corollary, which you mentioned, energy drinks. A corollary is coffee. Everybody and their mom can have a coffee brand. It's an easy one to start up. You can kind of source this product from China. But what is your market segment? Where's your market cap? So if you're okay being a business that does X, Y, and Z dollars, I think you can succeed. Where it also happens, though, to speak a little bit more about saturation, is then your segment can get micro-segmented out, right? So that starts to segment out. Coffee is a good example. You have Black Rifle, which targets a particular, I would say, conservative audience segment. There is now a new coffee that's come out in the last maybe couple of years called 7 Weeks Coffee, which targets the pro-life movement. So now all of a sudden you have two similar cross segments. The 7 Weeks Coffee now can take some of the Black Rifle segment. You may have others that come in with a Christian segment. You may have others that come in like Buck Sexton just recently, and he's a Fox News commentator. He just had started his own coffee. I forget what it's called. But you get the idea. So all of a sudden you have segments within segments, and they start to micro out, and then you might start to lose and dwindle them. So in that way, saturation becomes more complicated. And so it hurts the big guys because they start losing market share, which is happening in retail. But then you also start to get competition within competition. And so you have to figure out how to scale beyond that. I think Black Rifle did a good job of that. They pivoted pretty quickly into being a retail brand, away from just conservatives kind of like buying and supporting like conservative causes, and then I'd say pro service member, pro military, right? So that's a great question. It's that, like I said, $1 trillion question, certainly $1 billion acquisition question. All PE, private equity, VC, the venture capitals of the world, they want to answer that question of where's your product market fit, and then where can we scale? Because usually a lot of people want to start in a market where they see market size like coffee, billions of dollars a year. But I'm like, well, where can you actually live? Because that market segment is so saturated.
What do you recommend for CPG brands, right? We talked about coffee, energy drinks. I think one of the downsides is just the COGS, or the upfront cost of producing the energy drink, producing the coffee, and shipping it. I mean, how do you recommend that entrepreneurs or brands manage that? Obviously, that just cuts into your margin. For example, if you're selling an info product, a course, a software application that has no cost of replication, there is no marginal cost, and there's a big marginal cost of CPG. So what are your strategies for managing that and scaling a brand where you have to pay for inventory in every energy drink that you produce, for example?
Yeah, finding a good partner when you're sourcing this is crucial. And I have a couple that I work with that are great. So to some degree, you need to start and understand your margins, understand where you're going to test within your margins even. So it's, let's say, flavor formulations, right? Or certain formulations you want to test into. Your co-packers, your drop shipping, where you're shipping to. So some of the strategies. In a particular business partner of mine, he is a co-owner of a beverage company. They right now, to order to kind of, I would say, not say cut down on cost per se, but I'll give one, like, I think crucial example is shipping. Beverage, and we'll use beverage. Shipping beverage is a pain in so many ways and for so many reasons, not least of which it's expensive. It can also break, right? So there's a lot of like exploding cans that can happen. How do you make sure that you aren't just sending something like shipping beverage to California if your co-packer is somewhere else, or your inventory is, let's say, in New Jersey? That is going to cost a lot. So I typically like to have brands start in a way where shipping isn't going to hurt them, and shipping ends up being the worst offender usually. Maybe sourcing your cans, there's a lot of worse offenders, but shipping is certainly one of those. So the easiest one to do is start regionally and start your market regionally in a way that makes sense. So maybe you're only just East Coast, or maybe you're only east of the Mississippi. There are certain ways you can absolutely do that and target so that you aren't eating the cost on shipping. And that's like first and foremost. Then even on kind of formulation, right? That's another one. I tend to advise brands to start with a higher price point and figure out a way down versus starting lower and then working your way up. It's really hard to convince consumers to buy a product that they were buying at X dollars, and then it's a 30% increase because the margins just weren't there. Another good example is tea. Certain blends can be very expensive to do. And so consumers don't realize that it is costly and the margins can be slim. I recommend all these cutting down costs where you can. I think operating at a 60 to 70% margin is usually good. I have brands that operate at 30, but now all of a sudden that gets in a much scarier position. If you can find a way to cut costs, whether it's on formulation, whether it's on ingredients, whether it's on shipping, whether it's on packing, whether it's on labeling, whether it's on even legal, something that you can do within that to test into your market to make sure that you aren't, always breaking even no matter what you do. I think shipping is a good one. And I think finding good partners that I can recommend, usually in the beverage side, that makes sense. Yes, very often it's going to be difficult with your margins if you don't understand them immediately, because I've had a lot of brands quickly, like shipping ice cream is almost not always, shipping frozen is almost unprofitable from the get-go, no matter what you do. Like that's just one as an example. Whether it's shipping, you have to have dry ice, etc. There's a lot of things that could go wrong. So usually the first and foremost, if you have a DTC business, my recommendation is try to find ways to ship and get your product regional so that you aren't, having to spend $15 to ship your product.
Yeah, I think that's good advice. Is there a specific area of CPG that tends to have a lot higher margins, or what is like the highest margin product, right? I know top of mind, like perfume. I know that's very high margin.
Yeah, makeup and beauty can have very high margins. They can have very high margins. I would say that in the CPG space, I've seen which is why you saw, I would say, a resurgence or a lot of growth in a lot of, certainly on the female entrepreneur side, but male too, that started their own beauty brand. Beauty at scale can be great on margins. We're talking, 90% margins. Perfume, like cologne, is another one. I think you make some good points. I'm surprised that there are more beverage because it's harder to get the margins there. It's easier at scale, right? So some of these also are better at scale. Beverage is better at scale. Fashion is certainly better at scale. Furniture, right? Furniture, home goods is better at scale. Those are but if you can get it within beauty and you can make it work, and I've worked with brands that are male skincare, for example. If somebody can unlock that, it is great. There are great margins there, but it's also something that is untapped. So beauty, usually beauty products, but I will sort of caveat that, Connor, because since COVID lockdowns and since all of that, a lot of the supplies have gotten more costly. So even beauty that used to be 90%, because of some of these ingredients and formulations and making sure that it's compliant, not testing on animals, all of these start to add up, right, on costs. And so it used to be a 90% margin, has probably dwindled as far as I've seen, especially when you want to get interesting in terms of your formulations. Those have also dwindled as well. But I would say that would be one. Usually I have seen snacking be pretty decent, right? Like kind of like your chips, your protein bars have been pretty decent. But even then, the sourcing on all of this has gone way up. So the whole game has changed. I think this has hurt DTC businesses to some degree, just being able to get kind of the ingredients that they used to be able to get. They're a lot more costly. There are more tariffs. And all of these things, the formulations have gone up too. So the margins have gotten thinner. And I think if you've seen this or read about it, there is certainly a difficulty in CPG now, and I'd say even more broadly DTC, to being able to make these margins work in your favor, and then certainly being able to do them. So, and then quick corollary too is even in something like cleaning, which had decent margins. I was at Clorox and worked with Clorox for years. Cleaning is good at scale, but if you're starting something new, you want to be BPA free, you want all these other things that normally consumers are now looking for. Those eat away at your margins. They eat away pretty substantially at the margins. And so, yeah, that's kind of how I'm thinking about it in this context. Usually you have that market segment, and then this is why price points are also up. So the ingredients in usually within beauty were pretty simple. Even on perfumes were pretty simple, but then you have to have scale. And now because of those bit players, which I think you're alluding to as well, the smaller ones, the ones that are coming in and taking margin or market share, it's harder for them to be profitable, but then also difficulty at scale to be able to do it efficiently, even within those segments that I mentioned that were once high margin.
So I kind of want to get your opinion too, or I'm curious if you kind of saw this coming, right? Where it just seems like now the barrier to entry is so low that you kind of mentioned anybody could start a perfume company if they want to, or any sort of CPG e-commerce play. I mean, do you view this generally as a good thing for the market, a good thing for the end consumer, for the entrepreneur, or are we kind of in a place where there's just a lot of fluff and noise and crap that's out on the market that shouldn't be there? I'm just curious what your opinion is, considering your background in the space.
I love it. I love the underdog. I've always felt I've identified with the underdog, even though I've come from some of the big companies. I love seeing the mom and pops come in and disrupt the market. The market needed disruption. There are some players in CPG that kind of have, I would say, the platonic ideal of products. And I won't name names, but there's certain, like, let's give one. Oreo to me is like, there's nothing better. And you have a formulation that's been around forever and ever and ever. Something like Oreo can't be replicated. Even then, you can still have, and you should have businesses that start. So I love that there's a space here in a way that there wasn't. There's such high barrier to entry. If you wanted to have a fashion brand, think about this 20 years ago. The distribution was controlled by the malls, right? And then maybe you wanted to start your little boutique, but you couldn't scale. So now that there are all these players, it has allowed for massive amounts of innovation, which I love. Better opportunities to kind of get individuals kind of to realize their capitalist dream, which I'm pro being able to find a way to kind of make the life that you want to have to live livable. All of this is really exciting to me. I think we live in a universe where I'd say the negative, or I would say the trap, so to speak, of it is that because people see it and they see big numbers and they're seeing videos, they're seeing everybody talking about it, It's not quite like a gold rush, like in the 1800s, right? It's not quite in that way, but it does seem like too good to be true. The reason is you can do it. Brands do it. Small bit players that I work with that didn't even have any background make these businesses doing $1 million a month, 100 million, $100 million businesses, $25 million businesses a year. I love that. But the thing that they don't see is it's either a lot of time, really a lot of time. I mean, this becomes your full-time job, and or usually capital, some kind of cap investment. Those are the two things that are, so as while you have that opportunity, they don't realize that you still need to do the fundamentals, right? And that's kind of what we do at an agency. That's why we're there to help with that. But at the same time, again, people have done this without means, without agencies, and they come to me after they've scaled it to like 10 million a year and they want to be able to $20 million brand. So I love this as an opportunity. I think it's nothing but good for the market. I think it's made the ecosystem better. I think we're more green friendly than we've ever been. I think we're better to the environment. I think we're better to animals. I think you think of all these things, we're better in terms of production, right? When it was only Nike, and think of all the labor practices that they violated in the 90s. Like things have gotten so much better and it only happens. And I truly believe that's the wonder of the capital market, the capitalist kind of market that we do live in, is that it incentivizes betterment. I believe it incentivizes betterment. And I think most people would agree, look at labor practices in the 80s and 90s and today. Are we not in a better place? Yes. Do we have better brands? Yes. Have they made even those large players, those whales in the market better? Absolutely. I think we can all agree on that. So I think these are all the wonderful things. The only the only like red flags that I have are, don't just look at that as it can be a mirage. It still takes a lot of dollars and time to be able to kind of compete in these marketplaces, which is why you see the celebrities doing it, because they have the cap investment, they have the name ID. But small, again, I can list off to you small businesses that do 400,000 to 500,000 a month that had no knowledge of all of this before I kind of went in. So I love it. I absolutely love it.
So do you recommend for anybody out there that wants to be an entrepreneur or has entrepreneurial interest to enter into the space? I mean, it sounds like you would recommend it. I mean, just try. Worst case, you fail, but there is some capital investment, so you could lose some money as well. I mean, there's just so many options. This is one option. Start something in e-commerce, build a following on YouTube, start a podcast, drop ship. So how do you know that this is the right path, or why people should choose this path over others?
Yeah, I highly recommend it. If you're an entrepreneur and you're interested or have the itch or have the bug, so to speak, chase it. Chase that dream. No matter where you end in that journey, you're going to find that you're in a better place unless you're going to be in a better place unless you invest all of your dollars. The nice thing about usually a lot of this is you don't have to put all of your savings into one idea. Test and learn. That's the other thing that I love about digital and I love about DTC. You can take orders on demand. You can start this small. I think that if you have that passion, you should look into it. Now, there's something that I saw that Mark Zuckerberg said is, don't make it a business until you start to see that it's working. Where I think early stage entrepreneurs fail is they take an idea and they invest in it without proving out at all that there is a market for it, that they know their market, that there is an interest. If you have a passion for something, you should start it small, see if there is a market, test into it, then it becomes a business. I think Zuckerberg is 100% right. I think very brilliant way to say it's kind of your side hustle until it's your real hustle, but it should be that side hustle, and think about it. Usually I see entrepreneurs have an idea and like, we think this idea has a market. Well, it might not, and you might not have tested into it. Really understanding your market cap. Where do you fit? What is your audience within that? Kind of what we were talking about earlier. If you understand that market size, you should absolutely do it. And if you are thoughtful in the way that you approach it, you should also do it. I always recommend anything that you do, it's always better to do it and lean into it than not. And it's something like anything. If you have the passion for it, it'll lead you somewhere better. You'll learn more about business. You may learn that this is not the particular business that you want to invest in. You may learn that you're better at something else. You may find something else that you're interested in. And again, I go back to, that's just part of what we should be doing in overall as humans, is finding what really excites us and also what we're good at. When we find what we're good at, it could be that's where the entrepreneurial spirit. Maybe you're doing something that you don't love, or maybe you're okay at it, but you're better at something else. And I think YouTubers, podcasters are great examples of that. They weren't content creators. A lot of them were maybe engineers. A lot of them were doing something else until they realized how good they were at content. And they never would have that chance if they hadn't leaned into it. I always recommend entrepreneurs, those with ideas, to lean into it, you'll end up in a better place than when you started.
No, I think it's great advice. I want to kind of talk about the macroeconomic state of the world, though, and you kind of talked about it, 2019, maybe from a CPG e-commerce perspective to now in 2024. Can you kind of articulate how that's changed and if macroeconomic factors are going to be a big factor going forward? Inflation's really high. You
Yeah.
mentioned the cost of inputs and goods are really high. There's just a lot of uncertainty, but does that matter? To your point, you just said everyone, you should explore your entrepreneurial interest. You should go for it, but will it be more difficult going forward?
It does matter. It does. And I can kind of take through the way that I think about this and winding back the clock. 2016, 17, 18, 2019, all the way through lockdowns. Free money reigned, low interest rates near zero. Everybody and their mom could get a loan. Everybody and their mom was spending dollars to try to prove out their model. This was the days of fake it till you make it, fake growth, right? There are a lot of those businesses, and there are some in the beauty industry that did that. And I don't know if they actually succeeded. You saw a lot of these. Where are those brands that you might have thought of in 2016, 2017 through 2019? They had free capital and they tried to fake it till they made it to get the private equity companies or equity, give them money and then sell, right? These exits, these big level exits, these whales, right? What happened to those is a lot of it went bust. And it went bust, in my opinion, for a good reason. I never loved the fake it till you make it model. I think you should have a good, solid product and you will succeed in that way. Nothing takes the place of good dedication and hard work. Mac, what happened, right? So you had all this free money with low interest rates flowing into the markets, and you especially had it during lockdown. And I call it lockdown lucky businesses because they just got capital, but they didn't do the fundamentals. They didn't understand what profit even looked like within their own ecosystem of their own business. So they spent these dollars, capital dried up. Now all of a sudden they can't be profitable to save their lives. They can't even get a good customer acquisition cost. So all of these guys failed, and pretty epically as well. Where that takes us to today, there are goods and bads. The good is you have a lot of these fake players that have exited the market, rightly so. So a lot of this bad product has exited the market also. There was a ton of this sort of better for you formulation stuff that was just junk that is now out of the market. I'm happy about that. What it's left, and after the rubble, right? I think it's Warren Buffett says, like, once the tide rolls in, you'll see who wasn't wearing any pants. I think all those that weren't wearing pants have kind of been exposed at this point. So what it leaves is the same fundamentals that are true now that they were true 50 years ago: is build a good brand, build a good product, and so the tortoise wins the race in this way. Macroeconomics are going to be a little more challenging, though, for that tortoise to start that race in a way than it was previous. You're absolutely right. But what it means is when you don't get access to free capital, you're going to be more penny pinchy in a way, which means you should look at your business fundamentals much more closely than somebody who got $10 million, right? A lot of those guys got that 10 million, 5 million, 100 million. They blew it. They blew it in an epic kind of like almost heroic fashion. They went out in a blaze, not so much glory, but they went out in a blaze. When you don't have access to capital, when cost of goods are so much higher, it's important to look at the fundamentals in a way. And so it's think about it this way. It's almost better now to start the business if you can make it off the ground and or somewhat profitable, because interest rates will go down. You have this 2-year, 3-year, 4-year business now where interest rates are at 8%, 7%, 6%. You build a profitable business, all of a sudden, we go back down to 2% interest rates. Guess who gets the first loan? You as a business who is profitable in those 4 years, in this prevailing you get a better sense of what the market is, and you can also tell your story more. So this is what private equity firms are looking for now. Capital is tight. The business, if you're looking to start a business hoping you get capital in that way, it probably won't happen. You can get it, but you certainly won't get those 10 million, 5 million, $50 million checks the way you were getting them before. And that's just the reality. But building the business now, exactly like you said, we are in a still inflationary period. Where I think this is going to go, I think we have at least another 6 months of inflation. I think we do. We juiced an economy with 3+ years worth of capital. Of course, we're going to see 3 years of inflation to catch up for it. But if you understand your market, you understand the fundamentals, you understand where you can go with a business over time, and you don't need that kind of infusion, I really think you're going to be in a much better position. All of this does change, right? So these are the stories. These are where the next stories are going to be made, right? the next Black Rifle that was made prior to this. Why is Black Rifle there? They hit it at the right time when there was a lot of dollars given. That's a long business story that hasn't been told, right? I think it's Kind Bar. There's another Cliff Bar. I might get this wrong, but you hit it at the right time. So I actually think you can find your fundamentals now. You're better off than you were then, because a lot of those were ghost companies, right? They were shell companies that didn't really do anything other than like hype. You have a good, strong company now, all of a sudden you can get that venture capital or somebody will buy you in 5 years. So yes, though, to answer your question, though, it is more difficult to find margin now. It is more difficult to find those consumers because consumers are much more cash strapped. So that's just something I think. Plan for slower growth, plan for profitable, slower growth. And if you can do that, you'll be in a much better position to weather the storm. And in these years of a business, maybe where you're seeing that, it's time to invest in brand. So maybe you have a company that's doing 20 million a year. The only way to get to 50 million is to start building on brand. You may not see it immediately. I think it's just tighter than it ever was, but I don't think that's a bad thing. Again, I think there are a lot of like horror stories of businesses that got millions and millions and hundreds of millions of dollars that are nowhere to be found. So you should all, you're asking the right question too. You should always be conscious about your margins and where you are as a business now more than ever. But again, I think it kicks out the scammers, so to speak.
Yeah, I think it's a lot of good points. And from your perspective in the companies you work with, are there still tons of entrants, tons of interest, people entering this market at a fast pace, or has it slowed down from your perspective where people are more cautious considering interest rates and everything you just described?
Yeah, good question. I'm still seeing a good level of interest. I'm seeing a lot of it. I don't know if I've seen it slow. I've seen the growth of those guys slow just a hair, in terms of maybe the bigger ones. So I would say those, to some degree, Connor, I feel like there are more very small ones entering the market than I've seen in the past. I think it's probably taken a dip, I would say, but I don't think it's so massive that it's noticeable. What I think is more noticeable is the level at which private equity is giving dollars to these. So what I'm seeing more is smaller businesses having to operate on the margins, right? Especially where we work in the startup field. We're not seeing many come to the table with, hey, we have $10 million to spend, right? So I think that's what's stopped. I think the interest in starting a .com in a way has never been higher. A DTC has never been higher. I mean, I get more of those daily than I ever have. But being able to kind of play with the dollars for us on the agency side is a little bit smaller, right? So that's why we like to take a more active role than, even before doing this, than maybe even I would have 3 years ago, more of an active role to kind of help that business start. Yes. So less medium-sized companies or even small with big dollar amounts coming into the market. Much more of a, we need to be profitable out of the gate than I heard in the past.
And then I kind of want to pivot too and talk about you as an entrepreneur and what you're building with your company. If you can kind of articulate where you are from an agency perspective and where you want to go over the next 5 years, near future, what are your goals?
Yeah, great question. We have a philosophy at the agency and it's new. So just a little background. I've been a consultant, individual kind of consultant with team members and partners that I've worked with for since 2019, give or take, back and forth on certain things. This is the first major venture where we've already started with clients where it's a full agency model. And I'm going to say this is kind of our value set. If you know The Godfather, it'll resonate. If not, I recommend watching The Godfather. We are Vito, we're not Michael, which is Vito, he built his empire. We're not mafia, I promise, guys, even though Lorango is the last name and it is Italian. We're not mafia. But what I liked from those films, Vito Corleone kind of built the relationship with the community that he was in. He built the one-to-ones. He got to that point where they trusted him. He was the Godfather for that reason, because he connected and he got there with those individuals. Whereas Michael, opposite, right? Michael was very cutthroat. He was, you need to do something for me to prove it, right? And he eventually lost his entire family. He had nothing. You end that movie, spoiler alert, he ends the movie with nothing. And that's a beautiful, unfortunately tragic, but beautiful ending where he has his own brother killed. Very dramatic example, less dramatic, obviously, here at the agency. But what we're trying to build is building these connections, working together with entrepreneurs where we're a part of it, where we take stake maybe in the business, but we certainly take stake from we are building you up. We want to build a business and we want the next Black Rifle. That's kind of where we're looking at this, but we want to start, we can start small. That's our big win. In the 5 years, Connor, we have the next Black Rifle. That's what Startup Accelerators is going to find. And maybe not just the next Black Rifle, the next several one of them, right? Taking and finding these businesses at X dollars and doing 25 million, getting, Black Rifle at a billion dollar cap. That's what we want to do. It starts small though. It starts in finding the right partners, finding the right product. What we would then do, right, when we have that is it the right product market fit? How do we get you to market? We on our team know the fundamentals of what it takes, from branding, from audience segments, what the website needs to look like, where you're going to go to market, what margins look like, right? So we are that arm taking your, again, Series A, early Series A, Series B funded to kind of get you to that point. That's our kind of promise and our offering. Separately from that, we have that one-to-one connection. And I will say this, and I will not name names, but agencies usually tend to have a point person and then they outsource it to something else, somewhere else. That's totally fine. I'm not knocking on that model. It might make sense, but it's not kind of what we want to build. Going back to that kind of model, that kind of value that we have is the one-to-one. We're there. What we're building is like, it's ours, right? We want you to be able to call us or text us on a Sunday. That I do that all the time. This is my clients. And not only do I like that as a business, I like that as a person. It's valuable to me. I like having these connections. I don't know what this is for if I'm not building that and building it with people, right? That community element matters a heck of a lot. I know it's hard to separate business and personal, and you should to a lot of degrees, but I also, as I've had clients that I've worked with for years, it is both in that way personal, but it's also professional. So I don't want to have these clients that are one and done. We want to be able to connect with them deeply in terms of what they want to do, why they want to do it. We want to be partners to them. So the word ultimately from this is partner. We're not just an agency. We don't want to just be an agency. I know that's agency partner. We kind of want to be a business partner in that way. So that's why we have that structure that we're building, which is here are the fundamentals to take you from A to B, or here's the fundamentals to even start you, or here's the fundamentals to kind of get you where you need to go to get the business. You're kind of ready maybe for that next level. We know, and there are other partners maybe we would recommend, is once we get you there, where do you go, right? So maybe we remain as a partner. If ideal, that partner kind of goes there. They go on maybe, and we help them graduate somewhere else, and the business scales from there, right? So again, it's like a partnership model, right? But it also is in that way. It's not just we want to keep it as our own. We want to be able to scale you to that point where you're working with an even bigger company at that point to be able to scale you. If you're 100 million, get you to 500 million, right? Something like that.
And who is your avatar customer? Is it any consumer brand, or is it more of an established consumer brand? I mean, for anybody listening to this, maybe if they are a good fit, I mean, are you turning a lot of people away and looking for, like you kind of said, those diamonds in the rough, or like this is the specific company we want to partner with?
We haven't turned away too many yet. And there's a big portfolio that exists here. It's a good question. Who is the perfect? Right now, it's going to be challenging. We end up turning away just because we don't have the time and staffing, but also, and I really say more time than staffing, right? So there's only so much of my brain power that I can use in a day before it like completely goes, mush. Perfect avatars. There are ones that if they are a business, and maybe let's say they're doing 100K a month in their .com, but they want to be doing 2 to 3 to 4. That's usually where we've been able to specialize and see that growth, or even maybe 50. Now, we love the ones that start from scratch and we help there, but usually they need a little bit of capital. So I love those. I love working with those from the ground up, getting them started. If there's capital, usually it's not a good fit with an agency because they'll need the capital to be able to do everything from like product market fit, audience segmentation, branding, getting everything set up. Usually a .com that's kind of in the 100K range a month, give or take. It can be even 80, but usually where we see the biggest wins, 100 a month to then 200 to 300 very successfully, and then scaling it from there. Corollary, although not as much, there aren't as many of these players where we can also specialize. And it's sort of that one. And then those that are maybe doing close to 2 million a month and then want to be able to do 2.5, 3 with the budget that they have. We can be efficient and that's where I've had a lot of success as well, both as a consultant, but even as on the agency side, taking the dollars. Usually when you're a business doing $1 million a year, you don't know what you're spending, a month. You kind of don't know where everything is going. You have a lot of parts, and we can come in and structurally make sure that you have best practices, right? This is where my training at the wonderful company, training at Forever 21, being able to take that business that was already doing hundreds of millions a year and then tack on 10, 20 million in additional incremental revenue without increasing the budget. That's usually the specialty, right? So I would say there are less of those. I really enjoy those because very often when you're a mom and pop shop, or husband and wife, and you've gotten it to that point, you don't really then start to know what the fundamentals are to get you to that next level. And I have several that I've worked with that got us there at an efficient rate. I usually say those, keep the budget you have, you can get incremental revenue to kind of scale, right? And I'd love those where they're 20 million to get them to 40 million. So those, I know those are wide differing buckets. I would say in the doing some revenue, kind of in around 100K on .com. And then if you're doing several million a month, it would probably be the right fit.
No, sounds good. That's helpful. Okay, I just have a couple like hypothetical questions for you here to close this out.
Yeah.
So knowing everything you know now, you go back 20 years in time, what advice are you giving to your younger self?
Gosh, 20 years ago, let's see, I was just kind of out of grad school. The first one would be lose the ego and learn from people. You don't know anything. You don't know anything at all. And you should probably learn from people that are more successful than you. I think I would have started there, which is, hey, you're going to grow, you're going to learn quicker if you just quiet your ego and let the people that know better, more successful, teach you. Not that I wasn't that way, but I think it would have been a good guideline to be able to see who does what. It's not that, oh, I can do it. I'm smart. I can do it. No, lose the ego, chuck it out the window. Keep it because you want to learn, right? So you want to learn, you get better, but you do not know what you don't know, and start there. I think the other one too would be start to really learn what you're good at quicker rather than spending a lot of time in X, Y, and Z areas. Especially when you're younger, you can dabble in lots of things. I think it's good to learn and fail more quickly. So I would have given myself advice to learn what you're better at early on, then try to play at things that you're not good at. and that is a hard one. And then you mentioned earlier on, right? Testing and learning. Failure is important. It's the best thing that you can do as long as you're learning from it. It really is. And I know that's such a friggin' cliche, dude. It really is. But it's also very true. The worst thing that happens is you live this moderately comfortable, slightly boring life and that you're wondering if you could do better. Usually it's going to take something that jolts you out of it. And that comes from trial and error and failure. So the advice would be don't stick around in this one thing and hope it's going to change. You will need to try new things. I've been lucky in a way that I've kind of been forced into certain things. It come from family background. All the Lorangos were kind of forced into marriage to some degree, happily so. But it just sort of happened. And so it's one of those, if you have the will and the desire, push yourself more, be willing to fail. Don't just rest on your laurels. Always work to do better. And so those are things I just would have told myself earlier that I eventually learned over time, in the prevailing 20 years. But those are something that I would have liked to have and I think the ego one is the most important. Learn. You're not good until you're good, but let your ego drive you to be better, but learn from people who are successful, and then get better at what you want to do.
Yeah, I mean, it's kind of like when you're 19, you think you know everything, but then
100%.
you get to 30 and you realize you don't know anything.
Yes. Yeah. It's a cliche,
yeah, no, I think,
and it's true.
Yeah. When you look back, it's definitely true. So I think that's great advice. Okay, next one. You lose everything, $0 in your bank account. You have to start over from scratch. What are you building and why?
Wow. I've thought about that one, man. It's a really emotionally visceral question. What would I do if I were to start over again? And I had to. It's like if you have to. I think it goes back to a little bit of that. The first question you asked. I would probably. I have markers of what I think success looks like now, and I know what that is. If I had to start over again, it'd largely still be what I do now, but I'd find that company. I'd find that one that I believed in. The same way I got kind of lucky, the wonderful company. I really loved working there. Love the people. Linda Resnick, let's say she's mercurial, but I learned so much and I thought she was fantastic. If I lost everything and had to do it over again, I'd find that company and I'd become a co-founder of it and I would invest in it. Right product, right team. And I'd blood, sweat, and tears, right? I look at the way Black Rifle was founded. I think the way that he built that and how much he worked, that's what I would do. Use all the knowledge that I have to probably build a company or business, CPG, or work with somebody who I thought was a really exceptional founder to be able to grow it. I think that with the fundamentals that I had, who knows, Connor, that worst case, it may take me in a whole new route. And I like that because I think about what would I do differently? And I think not being afraid to take those risks. I think one of those things that I would do if that happened again and you have no capital you kind of have to make it quicker in a way, right? If I'm like where I am in my age, everything happened. You lean into things more heavily where you are a little more judicious and conservative now when you have things. And so taking those big swings, I can even think of the kind of marketing that I would do if I had to take big swings. You'd pay attention to it. You would definitely know it. It would be fun. It would be in your face.
Yeah.
It certainly wouldn't get me canceled, but it certainly might be a thing that would make people pay attention because I don't have those risks. There's nothing to risk at that point. The only risk is, I guess not eating. But I love that question. That's kind of how I would think about that is go out with all these ideas that I have, partner with the people that I know that I see markers of success and work with them.
And aren't you kind of doing that now with the agency, or can't you do that and you'll still have capital to invest and take a stake, right? Is that
Yes.
kind of your thought process? Yeah.
Yeah, Connor, no,
Very
you're
cool.
right. I mean, it's something that I think about too, as I think about marketing, what would I do if it were my brand? How would I look at this? And you're right. I mean, so many of those questions, and just as an entrepreneur and as I watch others and listen to others and read others on their thoughts, a lot of these things that end up coming to fruition in this Jungian way, they're the subconscious, right? There's a subconscious you, there's a subconscious me that is doing things that I don't even know that I'm doing, but I'm moving in that direction, right? I mentioned slowly but surely, right? Getting to this point, I would talk about, oh, I'm a business, but I wasn't really when I was even doing it micro consulting. Now all of a sudden, here I am with people that I'm working with, the companies that I like. You kind of manifest it, but you also do it in that way. And so as you're saying it, as I'm saying it, there's subconscious things that I haven't thought about that I'm probably going to end up doing. Connor, we talk maybe in a year from now, all of a sudden it's that company doing that kind of marketing that I want to do, going to market with it, right? Because I'm talking about it. And again, it goes back to just doing the thing. You're so much better off doing than thinking. And, my takeaway even, I don't think you meant that, but mine might be, David, just start doing the thing, right? Doing that marketing. But yes, this is exactly the safe way, I guess, that I'm doing it, the safer way, the way that, all of our parents would want us to take risks, right? Or your grandma would want you to take risks. Yes. But there's something fun and exciting of thinking about it as though it was your only thing and you had to go with it. But you're absolutely right. It's kind of the way that I am looking at it in a more structured, I'd say professional, not like I'm 25-year-old kind of way. The good old days.
No, very cool. And last one here, squeeze this one in, and it kind of ties back to what you said in your last response. But if you could pick anybody, it's finding that person that you would want to build a company with. Anybody dead or alive to build a company with, who would it be?
Dead or alive to build a company with? I'm going to go way back, and I'm going to go Henry Ford. I'm going to go Henry Ford. I'm going to go way back, or maybe it would be, let's go Henry Ford. And I'll give a reason why for myself. Operationally, Henry Ford built what he built because of the operations, right? And then look at any other entrepreneur that scaled the heck out of anything that they've done. It's operations, right? Yes, it is, of course, product innovation. And of course, Henry Ford, genius. But the operations within the way the line model, right? The way the production model, the way that he did that, whether you look at Jeff Bezos and what Amazon built and why Amazon scaled the way it did, you look at Tesla and being able to do that as well. So I have two car companies as examples. But I would say what I like to find and what I like to work with, where I come in, understanding the audience, understanding, as I mentioned to start, the right brain, the creative side of things. I really do like that, even though, I'm not quite as creative as people that do this for a living, but it's a part of what I love and appreciate. Separately, operations are undervalued in anything any entrepreneur does. And those guys that I mentioned, and you can think of any other one that have businesses that were operationalized in that way. I mean, they're brilliant, right? You even look at somebody like Walt Disney, right? Like that, you know what I mean? Hand-drawn animation, being able to operationally make that a business was very difficult because the process of which to even do it. And then to build a Disney, which took, think about how many decades before there are other animation houses that could even kind of compete at that scale. Warner Brothers, obviously at the certain level, but at that level of cinema. I would partner with somebody that had a great kind of operational mindset that understood that business is fundamentals. Your ideas are only as good as you can operationally make them happen. And so that, for me, I'm going to go Henry Ford. That's a way throwback, but I also like cars, so I guess there's that.
And is part of the thinking on that, it'd be complementary to your skill set. Hey, your marketing, your acquisition, somebody's running the operations behind you. It's a well-oiled machine.
Very much. Yeah, you hit the nail on the head. That was my subconscious highlighting the things that I like. Concepts I love, right? I love the Mad Men style way of doing things. I love the Don Draper way of the presentation, the excitement, the elements of that. But I know that a business needs to be operationally driven. And corollary with the minute that I have, what I really loved, if you look at the Wonderful Company story, Linda and Stuart Resnick are a married couple. They've run that business for 40 plus years, billions and billions of dollars a year. Linda, creative side, Stuart himself, more operations. And I think that they are, a case study to me of a business that as actually, you know what, maybe if the Wonderful Company ever did something outside of the Wonderful Company, they'd be others that I would partner with too. But they're a good example of that. And I really, again, I learned from that. I learned in that way to see how opposites can work very successfully together. And so myself and in my business, my partner is the operations, and that we work very complementary because my wild ideas need to be brought to reality. And then his process, I can then push him because also he's very conservative. I see big opportunity for a business. We push it in that direction too, right? So you need that. You can't be too wide-eyed. You can't be too operationally focused. That holds it down. You need to be grounded in reality, but you also need to be able to soar in the Wright brothers kind of way.
Yeah, 100%. All right. I know you need to run. So real quick, where can people find you?
Right now, hit me up on LinkedIn. The Startup Accelerator site should be done within a couple weeks, probably, hopefully, whenever this is. It'll act if people listen to this in a few weeks or a month or whenever it goes, post startupaccelerators.io. But right now, David Lorango, LinkedIn, hit me up there.
Awesome, David. I enjoyed it. Thanks for taking the time, and yeah, best of luck.
Yeah, man, I really appreciate it, Connor. It's been great. Thank you.